5, 4. Oh yeah, you mute your phone. 3, 2, and okay, we are live. Hello, everybody. Hi, and welcome back to Financial Empowerment Week. This is going to be the best of the best because we have our accountant on board, Glenroy Richards, and he's going to be talking to us today about the things that we need to know from our accountant. And so if you are a nonprofit organization, you should open your ears right now because he's going to be talking to you today. Yes, he is. He's going to be talking to you about how to manage your non-for-profit from an accountant's perspective, and get your pens and papers out, share with your pastors, share with your favorite non-for-profit organization, because you want to hear what he has to say today. So Glenn, welcome to the program. Good to have you.
Thank you very much. And thank you for inviting me.
Absolutely. I really do look forward to hearing what you have for the audience today. So just tell us, first of all, here about your business, and then we can get into the program.
Certainly. Well, I'm a certified public accountant by profession.
Mm-hmm.
I have been in business for myself over 15 years in Brooklyn. We're located in Brooklyn. We perform all sorts of business services, accounting, taxes, audits, reviews, compilations. We try to meet the needs of our clients in every way possible from an accounting and financial perspective.
Yes.
And so we are an all-rounded company, so we serve several different types of organizations, mainly not-for-profits and churches.
Yes.
But we also have other organizations such as daycare centers, real estate, and so forth. So, the practice is pretty well-rounded, and, we try to meet the needs of everyone that we service.
Awesome. That is great. So guys, listen, you need to turn your ears towards your cell phone, towards your television, whatever you're watching this program on, because you're going to want to hear what our accountant is going to talk about, the things you need to know from your accountant, with our accountant on the line, Glenroy Richards. Also, we want to thank our sponsor, Tom Estes from Allstate. You will see the information coming up throughout the program. We really thank him for sponsoring us at this time. So without further ado, here is Glenroy Richards on things we need to know from our account.
Thank you, Philip. It's an honor, as I said before, to be able to speak on this platform. I take it not lightly, and it's a privilege. Now, I was asked to speak today in regards to not-for-profit organizations. But before we go any further, we need to know that there are three types of organizations. There is not-for-profit, there is non-profit, and then there are for-profits. Okay, and these terms have different implications. For your taxes, for your corporate governance, and for your business activities. Now, let's look at the different. First of all, we'll be speaking only today on two areas: non-profit and not-for-profit. All right. So the difference between a non-profit and a not-for-profit, what are they? Well, a non-profit organization is one that qualifies for tax-exempt purposes by the Internal Revenue Service because its mission and purpose are to further the social cause and provide a public benefit. So non-profit organizations that provide benefit for the public, such as hospitals, universities, national charities, and so forth. These are organizations that are considered non-profit. Now, the difference between non-profit and not-for-profit. Not-for-profit, glory to God, is one that does not earn a profit also, glory to God, but its purpose is different from that of a non-profit. The not-for-profit, it doesn't earn a profit, as I said, but it it is there to serve the purpose of its owners. For example, a not-for-profit organization can be a sports club, a motor club, and so forth. These were not designed for any particular public function. They were designed for individuals, a group of people who wanted to come together, who had a common cause. And so that's the difference between them both. Dorothy. Now they're both not for profit. They both have they both have tax exempt status from the IRS. All right. So so that's just a difference. Now between the two, I want to lay down some differences clearer so you can understand what the difference is between a non-profit and a not-for-profit. A non-profit, they are formed explicitly to benefit the public, okay, for the benefit of public good. They have a separate legal entity. They are run like a business. They try to earn a profit, which does not support any single member. In other words, a non-profit can make a profit. There are some people who have the idea that because it's termed non-profit, you don't make a profit. But no, a non-profit's purpose is to make a profit to further the purpose for which it was formed. The only difference is that the profit does not go into the pocket of any individuals. It is for the purpose for furthering the benefit for which it was formed. All right.
Got you.
A nonprofit also can have many employees who are paid, but their payment doesn't come through fundraising. In other words, a nonprofit, again, it has a purpose. For example, a hospital, they don't pay their employees through fundraising. They pay through the fee that they get from the government to run the organization.
Got it.
Right? So that's what a nonprofit does. A not-for-profit now, okay, it exists to fulfill an owner's organizational objective. For example, a few months ago, this young lady came to my office and wanted to form a not-for-profit. And the purpose of that not-for-profit was it was an association of Trinidadian people from Trinidad who were folkloric singers. In other words, it was for the benefit of them, of their culture.
Right.
Right?
Got you.
It was not for the benefit of the public.
Got it.
Okay.
That's a not-for-profit.
That is correct.
Okay.
Usually, you will hear rich people say that they have a not-for-profit. Okay.
Yes.
So that's separate from the individual. It's a part of the individual.
Got it.
And they are considered recreational organizations that do not operate a business, and their goal is not to earn revenue, but to really to entertain the people.
Got it.
All right. And usually they are run by volunteers.
Okay.
That's different.
So the not-for-profit is run by volunteers?
Usually they are, yes.
Yes. Okay.
Usually they are, yes. Now, both type of organizations are granted 501c3 status. All right. Correction. Are granted 501 status. Non-profits are granted 501c3 status. Non-profits can have other designations, 501c4, 501c6, 501c7, depending on what they were, on what umbrella they're
under. Yes.
Exactly.
Gotcha.
But they both have to be given that status by the IRS.
Got it.
Now, what does it mean to be tax exempt? We must understand that an organization, whether you're not for profit or non-profit, your most valuable asset may be your exempt status. Right?
Yes.
Status for a non-profit, it allows the non-profit, the people who donate to the non-profit, it allows them the opportunity to deduct the monies that they donated as an incentive for them to contribute to it. That's for a non-profit.
Right.
All right. So that's one of the benefits. It also
being a non-profit.
Yes.
Okay.
And not for profit, the people who donate, they cannot claim it as a donation because it's not for a public purpose.
Got you. Yes. Yes.
Being tax exempt also allows you to accumulate tax-free, capital tax-free, to acquire facilities, whatever you need to run the organization.
Right.
And you're not taxed on it. Okay. Having a tax-free status also not only allows you to be exempt from federal taxes, but many state and local taxes also. Once you become exempt by the IRS, many states and local governments grant you exemption also. So the benefit is not only on a federal level, but it can be on a state and city level also.
Got it.
So that's why it's so important to understand the difference and to know what you really are planning on doing, because again, you must be able to know exactly what your purpose are.
Mm-hmm.
Because the purpose for which you're forming the organization will determine whether it's a non-profit or a not-for-profit.
Got it.
That has to be clearly spelled out.
So let me see if I understand it clearly, okay? From a novice's perspective. So basically, if you're doing the not-for-profit, you're definitely not in it to make any money. You're raising money for a certain cause, right?
Well, they both are for a cause. What is
Right.
the difference though? Again, the difference now is that the non-profit is public. It's a public. Anyone can benefit from it.
Right. Got it.
Not-for-profit is different.
Okay. Got it.
For example, the little league. Let's say in your community you have a little league.
Mm-hmm.
Okay, that's first. But what's the purpose of that little league? To help young boys and young girls get involved in sports.
Right.
It's only for that purpose.
Yes. Got it.
You see, so that's different. Now,
so that's a not-for-profit.
That is correct.
Got it. Okay. Yes.
Now, it's important that both organizations keep accurate records.
Yes.
Accurate records. Now, when we say records, what are we talking about? Well, a record is a written account of the proceedings of an organization. Okay, it's information or statistics gathered by the organization over a period of time that tells of that organization.
Yes.
The question is now, because they are not for profit or non-profit, must they keep record? Yes, they must keep records.
What kind of records?
And I'm going there now.
Okay, got it.
It's very important for them to keep records, and the reason why it's important for them to keep records is that they must maintain books and records to show that they comply with tax rules.
Got you.
Okay, and keeping records allows them to maintain their tax exempt status.
Mm-hmm.
Keeping records will aid them should, in case they were to be audited by the Internal Revenue Service or anybody else. They will have the records to show. Also, keeping records help you with your purpose. For example, whether you offer profit or not for profit, if you're going to operate, you need a budget.
Yes.
Now, like I said to you before, a non-profit organization has to make a profit also to survive.
Yes.
Okay, so they need to monitor their expenses.
Yes.
If you don't have a record, a standard by which to monitor, then you will not know what to monitor. So a budget is a record that organizations should keep to compare to the actual results of operations on a monthly basis.
That's why they need an accountant, right?
That is exactly right. They need an accountant. Exactly. It also allows them to prepare financial statements, which we do also, accountants.
Yes.
And also, these records allow not-for-profits to comply with statistics, racial non-discrimination statistics, and so forth. You know, some organizations exist and they have to account for example, just an example. For example, a school. What's the racial mix of that school?
Mm-hmm.
You see, are you being fair to everyone and so forth?
Yes.
These are public dollars. So like racial non-discrimination requirements and so forth. So these records let organizations know, let others know if this
Right.
organization is complying with the rules and
Mhm.
regulations. All right. And also, because you're tax exempt granted by the Internal Revenue Service, you're required to file what is called a tax return, what is called a 990 on an annual basis. So
Okay.
you need records to be able to file this return also
How often do you file that?
on an annual basis.
Annual basis. Okay.
Yes,
Yes.
on an annual basis. Now the question is, what type of records do we keep?
Yes.
We know we must keep records. The question is, what type of records do we keep? For a not-for-profit or non-profit organization, they must keep and have available at all times records that pertain to one, their existence. For
Mhm.
example, the articles of incorporation. It's important that they have that kept away, put away where it's accessible to them. At any time. Also, their employer identification number.
Right.
These two articles attest to the existence of the organization.
Got it.
Secondly, its exempt status. The 401c, like I said to you before, that's a record that when you apply for tax exempt status, we file what is called a 1023 application with the Internal Revenue Service.
A 1023?
Yes, which
Okay.
is an application to be recognized as tax exempt. Now, with that application is very in-depth, very involved, but once it's filed and it's done correctly, once it is approved by the Internal Revenue Service, they send you what is called a letter of determination. That letter of determination, and it's called a letter of determination because in its beginning, it reads as follows. We have reviewed your application for non-tax status, and based upon the application, we have determined. Blah, blah, blah. So it's called a letter of determination. All right. So that's important to always have, because if you are non-profit or not-for-profit, and let's talk about non-profit. If you are seeking donations, the donor who would like to claim the donation on his his or her tax return will ask for a copy of your letter of determination, because they want to make sure you can see that you're tax exempt, but the letter is the proof that you are exempt. So normally they ask for a copy of that, because again, they want to be able to claim their donation as an expense.
Gotcha.
All right. A third type of records that must be kept is operational records. An organization, when they set up, they have policies and procedures by which they operate. They have bylaws, which sometimes they amend. They meet periodically, so the board minutes of the meeting.
You said bylaws as well, right?
Yes, sir.
Okay.
Yes. And also their mission and vision. Why were they formed? What's the purpose of the organization? What do you intend to do? How do you see yourself doing it? That's the mission and the vision. And also, last but not least, they need to keep financial records, their budgets, accounting records, tax records, receipts of all income, of all finances that come in, receipts of all expenses that are incurred, copy of all the assets they have, list of all the assets and liabilities that they have. These are all kept in the company's financial statements.
Got you.
Also,
so is it okay to? So would it be easier maybe just to have two different accounts for that then? Definitely, or?
Well, when you say different accounts, these are not like bank accounts we're talking about now.
Okay.
These are records that you must have.
Okay.
For the finances, usually a company has a finance department or an accounting department where these records are kept. You know, payroll,
yes.
If they have employees, payroll records are kept there also, evidencing the money they pay the employees, the taxes during the year, and so forth. W-2s at the end of the year that are issued to employees and so forth. So these are records that must be kept by an organization to show that they are viable, that they are real, and that they are adhering to the rules and regulations of the state and government.
Right. Right. Absolutely. Yes.
Other
No.
questions? I'm sorry. Go ahead. Go ahead.
No. So I just wanted to remind everybody we have on the line accountant Glenroy Richards, and he's talking to us about today things that we need that our accountant need to tell us, need to let us know. So again, if you have any family members, friends, you have a pastor, priest, whatever you have as a nonprofit or not-for-profit, as I just learned, please forward this link to them and make sure that they have this information to help them with whatever processes they may have. And of course, Mr. Richards himself is an accountant. So make sure you give him a call. You see the number on the screen. So make sure you give him a call when you are ready to either start your business or you're already in your business. Again, thank you, Glenn. We'll go ahead and continue. I just wanted to plug that out there.
Sure, it's a pleasure. So we're talking about records now. What type of records should be kept? And we just went through a list of records that are very important, and they must be kept in the organizations. Again, records showing their existence, that they were properly organized, and that they had the proper papers filing, that they are tax exempt, and so forth. The policies and procedures of how they operate the organization, and bylaws, several type of whistleblower policies. A lot of policies are involved, so they have these things available on for the view of everyone, and also understanding that because you're a non-profit, you are subject to scrutiny by everyone. Anyone can access your records. They can request it, and you have to give it to them.
Wow.
Right? Now, how long?
Well, that's good for accountability purposes, right?
Absolutely.
Yes.
Absolutely. The question is now, how long should these records be kept? It varies. All right. Depending on the type of returns and the type of records, it varies. All right. Some records you will keep them on a permanent basis. Okay. Like for example, your application to be recognized as tax exempt. All right. Your determination letter, your organizational papers for which you organize, the articles of incorporation, bylaws, amendments, board minutes. These are official records that should be kept permanently on file. All right.
Permanently.
Yeah.
Wow. Okay.
Yeah. Because remember that in the boardroom is where decisions are made that affects the operation of the organization.
Right.
Right. So things that take place are usually authorized, and these records are found in the board minutes.
So is that why they have these companies that hold on to financial records for like corporations and things like that? I think I saw something the other day about a company that something mountain, like where they go Iron Mountain. I don't know if that's what they do, but it seems as if they store records for large corporations.
Okay.
Is that a reason why that would have to be done?
Well, yeah, because again, 5-6 years down the road, something might have happened, and they want to go back and see, like for example, who authorized it, or was this approved, and so forth. The IRS might want to audit your books going back 5, 6, 7, 8 years.
Right.
So it's important to have these records available. And so there are specified years that records should be kept. And so it would be good. That would be a good thing for each organization to know, to go and find out. How long should they keep? Because again, keeping records adds to your cost, because it's storage space. You got business space, and so you don't want to keep something in perpetuity that you don't have to keep in perpetuity.
Got it.
Or it's important to know which records should be kept for how long, and that will at least give you an idea as to how to proceed in terms of keeping your records.
Got it.
All right. Then you have we spoke about permanent records. Now you have employment records. Okay. Organizations that have employees must keep employment tax records for at least 4 years.
At least 4 years.
After the date the tax becomes due or paid. In other words, we're in 2020 now. If the IRS was to come into my organization, they should be able to find records going back to at least 2015, 2016.
Got it.
You see?
Got it.
Yes. And but then don't only depend on the IRS rule, because there are other organizations. And so that's why I said we need to know whomever we're dealing with, we need to know what their policy is on record retention. Insurance companies might want to audit your records.
Yes.
You know, and they might want to go back X amount of years and so forth. So it depends on the organization. The IRS is usually 4 years, but it's incumbent upon the organization, in my belief, to know these things, to do their homework and find out, you know, the time frame that they're required to keep records. So in the event something happens, you know, they will not be caught off guard.
Right. Right.
Right.
Wow.
Now, the question is now, can a non-profit or not-for-profit lose their exempt status? You have done everything right. You're operating now. You got your letter of determination and you're operating. Okay. You're giving out letters to everybody. Oh, we're not-for-profit. We're non-profit.
Yes.
And so forth. Can they lose their exempt status? It's a question that oftentimes they don't, non-profits, not-for-profit don't think about. Can they lose their exempt status? And the question is, yes, they can. Yes, they can. Okay. All 501c organizations must abide by certain rules in order to maintain the tax exempt status.
Wow.
They must abide by certain rules. Okay. For example, as I said earlier before, the net earnings of these organizations must not inure or go to the benefit of any individual or individuals.
Yes.
Okay. If the IRS was to see that happening, then they would take away your non-profit status.
Got it.
Okay.
So I mean, you're a non-profit can't have employees?
Yes, they can. I mean, yeah, absolutely. Think a hospital.
Oh, got you. Okay.
So a hospital.
Right. You know? So how is that not paying? I mean, having money go towards someone. I'm trying to understand how that applies.
When I say the net earnings, you know, once you do your accounting, at the end of the year, you do your accounting, and you have your revenue, then you have expenses. The difference between the revenue and expenses is earnings or loss. So if they have net earnings, that earnings cannot go to the in the pocket of the board members.
Got you. Earnings go towards the company. Got it.
Back to the organization. That's correct.
Got it. Yes. Now I understand.
Okay. Sorry for that confusion.
No. It's okay. I just wanted to understand it a little clearer. Yeah.
They must provide a substantial benefit to private interests. Okay. They must benefit other people. Okay. They must not devote a substantial part of the activities attempting to influence legislation. And a profit's job is not to influence legislation. You know, their job is to help the public. So the IRS frowns on that, and that could let them lose their exempt status. Also, they must not participate or intervene in political campaign on behalf of any candidate for public office.
Wow.
They must be neutral.
Must be neutral. Yes. Wow.
And their purposes and activities must not be illegal or violate fundamental public policy. In other words, if you're a not-for-profit, you can't be doing things illegally.
Yes. You got to follow the rules.
Yes, sir.
Sir. You got to follow the rules.
And we must understand that because we're not-for-profit, we might think that people are not watching, but we are being not-for-profits and not-for-profits and non-profits are being watched.
Yes.
Okay,
Yes.
there are watchdogs out there. Okay, within this industry, the watchdog groups compare and analyze non-profit organizations. You ever heard of GuideStar?
Yes. Yes.
That's one organization that compiles information and those comparison with with similar organizations and on a local level and a national level. All right.
Wow.
There are many other organizations. You have the American Institute of Philanthropy.
Mm-hmm.
You have excuse me, Charity Navigator, of course the IRS and other organizations.
Right.
So it's important that those who decide that they want to get into this type of business be cognizant of the fact that it's a real business. There's real money involved, and because it's a public organization, it will be looked at to make certain that it is fulfilling its purpose.
Yes.
All right, its purpose. All right, and so organizations can lose track of their purpose, and so it's important for them to not lose it, because if you lose track of their purpose, they could lose their status as exempt.
Wow.
And in order for them not to do that, they need to look at the way they currently do business and the records they keep. It's important to always always take a look at how you're doing business. Look at the records you're keeping, and make certain that these records are relevant to the business and for the operation of the business. It's important for them to review their policies and procedures periodically and update them when necessary. For example, lately what's been going on, Black Lives Matter, where people are tired of black people being hurt and discriminated against. So if you notice, a lot of companies are revising their policies. Certain things that they didn't allow before, now they're accepting it. For example, if you recall, look at now with baseball, the Major League Baseball, they frowned previously on players kneeling.
Yes.
Players, the Football League did the same, but now everybody's kneeling.
Yes.
So because of what's been going on, they've revised, they've looked at the policy and they revised it. So it's important to always look at what you have, and always update it as a need.
Yes.
So that will keep the organization always fresh and always upgrade, on top of what they're doing. They also need to have their attorneys review their bylaws, their minutes, to make certain they're adhering to policies and procedures set forth by the IRS for not-for-profits and non-profits. It's important to have an attorney. And last but not least, they need to contact their accountant, for assistance and guidance to become compliant if they are not with their financial records. Accountants, our job is to prepare financial records for companies.
Right.
And it's important that organizations hire competent people to do their work. That work for them.
Right.
All right.
Keyword competent.
Competent accountant. And how do you determine who's competent or not? Well, you look at their record, you look at their history, you look at their qualifications and so forth.
Right.
You inquire now in today's day with Facebook and with other websites, you can go and check on them. How many stars do they have, for example, and so on the website. So it's important. It's important that organization understand. And I always put it this way: when an organization is about to begin, there are certain key people that they need to have in their corner before they start doing any work. And those key people are an accountant, a lawyer, a banker, an insurance agent or company. Because that we really need.
So repeat that again.
A lawyer, an accountant, a banker, and insurance.
Insurance. Wow.
Okay. These are, in my estimation, these are key elements that every organization must have before they're up and running. Because again, the attorney is going to be the one who is going to make certain that all the papers are in order.
Mm-hmm.
The accountant also, the accountant
Right.
that the books are in order too, and the banker is there to make certain that the accounts are up and running and so forth, and they're there if the money needs to be borrowed and so forth. So we need the business the organizers of the not-for-profit or non-profit need to establish relationships with certain key people that will help
Yes.
run the company to make it prosperous.
Wow.
Okay.
Thank you. Oh my goodness. That is some phenomenal information. Man of God, that's awesome. That is some awesome information. Thank you so much. Now, those of you who are watching, you can see that Mr. Richards is fully informed. He is fully informed as to what he needs to do for you as a business. So I really would like for you to reach out to him. You could reach him. You could see his website at Richards, CPANYC.com. And also you can email him. You see his email that's on the banner. Reach out to him today. If you know that you don't have all your paperwork in order, or that you're having some issues and you don't understand what you need to do, reach out to him so that he can help you out. Tomorrow, if you have a storefront business, he's going to be on tomorrow as well. Yes, he is. He's going to be on around the same time, 1:30, and he's going to talk to the storefront business onto all the paperwork and all the things that you need to have in place to have a functional and operating business. Glenroy, I appreciate you coming on. Thank you so much, my friend. The information was invaluable. And I think that those who are watching really got the point, right? Especially in the end. I wrote that down. Before you start a business, make sure you have a lawyer, an accountant, a banker, and an insurance agent already lined up, because you just don't know who might be out there looking at your business, right? Exactly. So I thank you again. We have Oscar Capel, who's just come in the room. Hey, Oscar, how you doing?
Good afternoon. I was listening to what Glenroy was saying and taking notes.
Yeah, some great information, right?
Absolutely. One thing that he said, well, actually, I'm going to do one real quick general, Glenroy, if you give me a second. What I've noticed with all of the interviews you've been doing, there's one common theme. Hire a professional to do what you need done and save yourself a lot of money, stress, and time.
Yeah.
Ramona is a great example. You imagine trying to, how do I invest for retirement? I don't know. And Glenroy, keeping receipts in a shoebox is probably not the best way to do things. There are things the cat will end up sleeping in it. But there are. What do you suggest if I'm starting a small business? What do you suggest would be the best way for me to keep records? Is it a QuickBooks Online? What is your professional opinion on that?
Well, one of the things we must understand, I know these companies are, a lot of companies, software companies, they push their software and they tell you that you don't need an accountant, just use the software and it will do the work for you. But that's not necessarily
I don't believe that. No.
Exactly, that's not necessarily the truth. Right. One of the first things you learn in accounting is that the information you put in is what you will get out of it. So if you put in garbage, you want to get out garbage.
That's it.
Therefore, yes, the software makes life easier, but it's like anything else. You have to know what you're doing, right. For it to be right. So yeah, yes, we use software, but the principles of accounting come into play also. And if you don't know those principles, you could be doing things incorrectly, which will hinder or hurt you later on.
Right.
But yeah, I would use software, but with knowledge.
Yes.
Right.
I mean,
Exactly. Right.
I would
I'm
say
sorry.
that, I mean, I use QuickBooks, but I always like to have a professional look at my paperwork, because if I'm doing something, I'm not an accountant. Let's just keep it real. We always try to cut corners, and we always try to pretend that we know everything. But there's no way you know everything. There's going to be an accountant went to school. They got their degree. They know what to look for. This is their life. This is what they do.
Exactly.
Numbers, right? I am a marketing person. Okay, this is what I do. I stick to my lane.
Hello.
Right? I don't try to do paper. I'm not a numbers person. Okay, my wife is a numbers person. If I want to talk numbers, I talk to her. She's a banker, right? She's a banker. She's been in the business for 20 something years. So it would be adverse to to try to become an accountant when you already have one. There's one that he's going to make sure that you meet, all your I's are, dotted, your T's are crossed, and you're going to be good if you get, if the government comes in and audits you, or another organization comes in, the insurance company comes in and audits you. So again, those of you who are watching, you need to give Glenroy Richards a call, because I mean, he gave information today that really kept me informed, and I'm really glad that he was able to come on the line today and tell us a little bit more about what our accountant needs to tell us before we start a business, while we're in it.
Quick question. What is the difference between an accountant and a bookkeeper? Because I know everyone needs a bookkeeper and an accountant. So obviously they're a little bit different in their specialties. What could you explain?
Well, I'm gonna try and use an analogy. Hopefully, it makes a point. What's the difference between a lawyer and a clerk, and a law clerk?
Right.
So it's something in that fashion. Yes, we need bookkeepers, but bookkeepers' knowledge is limited. Their knowledge is limited.
So what I'm looking at, let's say I'll be using QuickBook as my bookkeeper, and then give all that information over to my accountant in a nice package.
Right.
Yeah.
So would that make sense?
Yeah. I've had clients that do that. They send me the information through of course on Excel, but through QuickBooks.
Right.
And we looked at it, and we make whatever adjustments have to be made, and so forth, corrections. We do it, and we notify them. We give them the entries, and then they post the entries and so forth. Yeah. So absolutely.
Right. So that's why I was saying QuickBooks as your bookkeeping instead of a shoebox. And then when you get it in a nice format that you can just work with it without a problem.
Exactly. And so that's where now the bookkeeper comes in, to make certain that it is done correctly and in the right, and everything is in the right place. Because you don't want to give the accountant the information that they have to spend all this time fixing, because then it's going to cost you.
Right.
Cost you more.
Right.
So the steps are QuickBooks to your bookkeeper, and then they clean it up and shine it up and give it to you to finish the job.
To make sure to make sure everything is done correctly.
Right.
Make
sure you hit all your legal points.
I'm sorry.
No, to make sure that you give it to your accountant to make sure you hit all the legal points.
Yeah, and not only that. Remember now that these records tell a story of who you are. If you're going to the bank for a loan, for example, I mean, you could be very nice and charismatic, Mr. Reed, but that's not telling me anything. Your charisma can't give me the money. What do you have to offer? So this is where the financial records come into play now, because they give a history of the organization. So if you recall, usually when you go for a loan, they say we want 4 or 5 years worth of financial statements.
Yes.
It's not for them. They want to look at the history to see the trend as there been growth in the organization, as they've been losing money and so forth. So before they give you the money, they do all that nice analysis of your business, of your organization, to see if it's viable to invest in your company. Because when they give you a loan, they're investing in you.
Yes, right, exactly.
So they need your records so that they can form their own opinion after reviewing it.
Got it. Wow. So everyone, you see how valuable and important this information is. Again, reach out to Glenroy Richards, who is an accountant, and he will help you sort through the forest and the hills that are involved in owning your business and keeping it running. For sure. So an accountant is like, having an engine to your business.
Yes,
you need one.
Yes.
Okay. Or you're just really not going to know, you're not going to last long. You're not going to get too far. All right. So thank you guys again for watching. Oscar, thanks for coming on board. Coming up next, we're going to have our very famous continuing presenter, who is going to be Frank Coppola. He's going to come on at around 3 p.m. and he's going to talk about building a business that you love. All right. Again, come back at 3 p.m. and we are going to have Frank Coppola. He's going to come on and talk about building a business that you love. Thank you for tuning in to our Finance Empowerment Week, and we will touch base